Howdy, folks. It's Darius Dale here to present our macro minute for Wednesday, March 30th, 2022. Starting with markets, we have stocks down this morning, commodities up, crypto flat, dollar down, global bond yields up. Big news this morning, talks with Ukraine yielded no breakthroughs, according to Kremlin spokesman Dmitry Peskov. It's underlining the difficulties both sides are sort of facing to reach a ceasefire. Germany triggered an emergency plan to brace for a potential complete Russian shutoff of energy imports as President Vladimir Putin of Russia steps up demands that fuel should be paid for in rubles. In fact, they expanded the list of things that which commodities that it demands payment for in rubles, which is obviously a way to get around the dollar sanctions. That includes crude oil, grain, metals, gas, etc. So this is actually intensifying relative to what we saw and heard yesterday in terms of things getting a little bit better at the margins. Big movers today. Obviously, that's positive for gasoline for the energy complex. WTI up 3%. You got Euro 1 month or 1 year 1 month overnight index swap forwards. Those are up another 5 basis points after being up double digits yesterday. So more hawkish policy being priced into the ECB swaps curve. On the macro front, the latest leading survey data out of the US and European economies were confirming of three macro themes we've been espousing of late. Number one, while growth is still fairly robust, particularly in the US, forward looking measures continue to point to a sharp slowdown. Number two, European consumers and businesses are being more negatively impacted by the recent string of adverse geopolitical developments. And number three, inflation expectations continue to rise, which means peak hawkishness among the Fed and ECB policymakers is yet to be fully priced in. So looking at the U.S. data first, U.S. Conference Board headline came in at ticked up to 107.2. This is March numbers. That's the highest print we've seen since January. The present situation index ticked up to 153. That's the highest print we've seen since last July. And then the survey or the expectations index that slowed pretty sharply to 76.6. That's the lowest print we've seen since February of 2014. So a big divergence between the present situation and the expectations index. Obviously, you know where the bouncing ball is headed. And then shifting gears to the European Commission leading survey data. So the economic sentiment indicator that slowed to 108.5. That's also March. These are also March numbers. That's the lowest point we've seen since last March. Their manufacturing confidence indicator ticked down to 10.4. That's the lowest point we've seen since last March as well. The services confidence indicator that bucked the trend ticked up to 14.4. That's the highest point we've seen since November. But then lastly, the consumer confidence number, that indicator slowed to minus 18.7 in March. That's the lowest point we've seen since May of 2020. With respect to today's probable range setups, S&P still bearish FAMs and overbought, minus 9.2% downside at the upper boundary of its probable range. Still trying to probe that probable range, kind of trying to get back to at least neutral from a volatility adjusted momentum signal perspective. We still got our eyes on that this week. WTI still neutral VAMs, fair fight, minus 14% of downside versus 14% of upside. Its probable range. Bloomberg Dollar Index, that's still bullish. FAMs at the lower boundary of its probable range with 2.3% upside from here. So dollars oversold. 10-year treasury yield minus 27 basis points of downside versus 19 basis points of upside in its probable range. That's still bullish FAMs raging if not. And then taking it to the chart here this morning, we talked about this a week or two ago. We said, hey, look, if Bitcoin and Ethereum keep probing the upper boundary of the probable range, they're going to break out to bullish FAMs. It's always a leading indicator. The width of this range and the skew in that range is a quantitatively linked to the volatility adjusted momentum signal. You got more skew to the upside if it's bullish, more skew to the downside if it's bearish. And we actually finally got that bullish breakout between Bitcoin and Ethereum. So let's see if there's follow through over the next kind of several weeks here. Obviously, anticipate there should be and would be follow through, but obviously, you never know with all the geopolitical headlines. That's something we don't have a great edge on. We're never going to have a good edge on. But in the context or in the absence of a real material degradation in those dynamics, we would expect to see higher Bitcoin and Ethereum prices over the next month or so. So that's positive. So in terms of the probable range, minus 11% downside in Bitcoin versus 2% of upside in that range, and then Ethereum minus 14% of downside versus 2% of upside. So getting a little bit more breathing room to the upper boundary there. And then lastly, gold neutral VAMs minus 2% of downside versus 4% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, March 30th, 2022. Best of luck out there today.